Movement Mortgage. Just wanted to reach out to you this afternoon and discuss refinancing, since everybody's been hitting me up because interest rates are at record lows. And one of the biggest questions I've been facing is it too soon to refinance after the purchase of my home or my condo? And the answer is it depends. If let's say you want to do a cash out refinance, typically the standard is you have to wait 6 months after your purchase to do so. But let's be honest, you aren't going to have that much equity in the home at that point, so it might not, make sense to do so if you weigh the cost of refinancing. Now, if you decided during this time where we're going through COVID that you needed to use forbearance or to restructure your loan with your current mortgage company or servicing company, the current standard for that is you'll have to wait 24 months to refinance. So that's something to keep in mind. If you need to use it, go ahead and do so. If you don't, try to stay clear of it and keep making those payments. So if you have an FHA loan, this is one of the easiest ones to do a refinance on. It's called the FHA Streamline Refinance. And those are just credit qualifying. Those are really quick to do. And those are a simple rate and term reduction. So you would be lowering your interest rate, saving money monthly by doing so. Those you have to wait 210 days on from the time of your purchase. Some other things to consider just in general is that even if you're only lowering your interest rate a small amount, it can actually make a big difference in what your monthly payment is. And it's also a great time to re-explore who you're using for homeowners insurance and stuff like that, and whatever you can do to kind of reorganize and lower that monthly mortgage payment. Something else to consider is what was your credit score at the time of your purchase? So if you've just gotten your mortgage about 5-6 months ago and your score was lower on the lower end, you may want to consider the fact that you haven't had enough history yet to really build up your score to get those nice low rates that we're offering right now. If your score was high in the beginning, this might be something that you want to consider going ahead and doing, knocking it out. Because like I said before, just a slight drop in interest rate can make a lot of difference in your monthly payment, depending on how the loan is structured. And the last thing to consider is how long do you plan on staying in your home? Because, of course, there's closing costs involved with refinancing, and that needs to be factored in what savings you're receiving every month. So let's say you have a mortgage of like $1,500 and you end up saving $200 a month, but your closing costs come in at about $4,800. It's going to take you 2 years before you actually see real life savings on that loan. Even though you'll experience the lowered payments every month, you won't get your value until 2 years. So that's something else to consider. I hope this was helpful for everybody. Give me a call anytime that you have questions or concerns about your mortgage or just the mortgage industry or real estate in general. I'm always there to help you. And bless you and have a great day.